Bitcoin is about to experience the biggest transformation of our lifetime. If you're not paying attention, you might actually miss out the greatest financial shift in history. Drop some insane insights, and I'm breaking it all down for you. Will Bitcoin hit $1 million? Will governments make a massive move? I just want to cover a few key points which I think are very relevant to bring it to your attention. Now, the first one is to do with what are the different types of digital assets in terms of how the entire crypto industry is actually made up of. So there's four digital asset classes. The first of which is to do with a digital token, a digital security, a digital currency, and a digital commodity. They're kind of built on top of the 20th century laws of what is a security and what is a commodity, which is important in moving forward this digital asset industry fit for the 21st century. So the digital token is really pretty much around a digital asset that has a certain utility value, whether it's representing a real estate property or a basketball team, tokenized treasuries, and so on, right? It has a certain momentary value in terms of its utility, but not to be confused with as a long-term store of value. That is a digital token. And it's things that fintech players can easily spin up and create. So digital tokens can be used as an idea of raising new capital in order to bring in digital tokens on the blockchain. So that is a digital token. Moving into what is a digital security. Digital security for me is any company, a fintech company, that takes care of issuing these digital tokens. So they have their own company structure. It could be a set of developers that take care of programmatically digitizing tokens available on the blockchain so they can be traded with, can be speculated with in order to make money. That is a digital security because it's driven by a corporate agenda to make money out of the issuance of these digital tokens on the blockchain. So that is, to me, a digital security. A digital currency can be thought of as stablecoins that can be used predominantly as a medium of exchange. So you can think of Tether, which is a classic, well-known example of a tokenized US dollar on the blockchain that can be used for cross-border settlement payments on the blockchain network, to avoid prolonged periods of settlement transaction processing times, and also to lower the fees, which is an important value add from these digital currencies. They are not store of value. Now, this leads me to my final classification of a digital asset, which is digital commodity. So for me, a digital commodity are digital tokens or digital assets without an issuer. So it's actually without a company being set up. So classic examples, if you think of analog examples of commodities that we're all familiar with, is gold, precious metals like silver, copper. So these are like commodities that are not managed and not produced by an issuer. So that is, for me, a digital commodity. Now, Bitcoin is that leading digital commodity precisely because it has that ultimate digital scarcity. There's only going to be 21 million coins in circulation. So it's perfectly pure money in that it is incorruptible digital scarcity, making it the ideal ultimate long-term store of value, which people can invest in and hold on to in the long term in order to preserve their wealth and to actually grow it. So they can actually leave it for future long-term horizon needs, whether it's for a retirement plan or even indeed as a legacy need, so they can pass it on to their loved ones when they're no longer with us. So unlike other digital assets, it isn't dependent on a centralized institution or regulatory approvals. So that is really important to understand. For me, the king of all digital assets are digital commodities, which is Bitcoin. This actually brings to my next point around stablecoins. If you compare it with Bitcoin as the leading digital commodity and the rest of the capital assets out there. Now, stablecoins, and I have actually mentioned this in one of my videos, in fact, quite a few, which is all the more reason why you ought to subscribe to my channel. It actually serves a distinct, different purpose than any other digital assets. They are used mainly as payment settlement, so used as a medium of exchange rather than as a store of value, a long-term store of value. Because stablecoins are great to introduce fiat money into the digital asset realm. And it's actually used as one of the leading indicators out there to understand how much capital is being drawn into the digital realm and how much of that is actually converted to purchase other digital tokens, for instance, Bitcoin on the network. So that is very important to understand. For me, stablecoins fit that medium of exchange class of asset. It's used for mainly cross-border payment settlements, particularly with those countries where they are unbanked or even debanked to anyone else in any part of the world. It also helps to reduce the time taken to process those payment settlements and also the fees, which is a major impediment. It's very, very expensive and a very elongated process. It also removes any middleman or any intermediary involved in actually settling those payment transactions, which is in stark contrast to the traditional finance arena where we need banks and credit card issuers to settle those payments for us. So for me, stablecoins is a great medium of exchange, not as a store of value. For that, I use Bitcoin, which is clearly the digital gold standard, operates independently of fiat systems. So what is, for me, the future outlook of digital finance as a whole? Well, we are seeing global transitions to digital assets overall. Now, I actually predict this massive shift where traditional finance merges with blockchain technology. That is, for me, the fundamental catalyst that we are seeing. I've already mentioned the 4 types or digital asset classes. So we've got stablecoins, we've got tokenized assets, Bitcoin, that will all replace outdated banking infrastructure, making financial systems more efficient and inclusive. Bitcoin is going to be that foundation of that new monetary order, so suggesting that Bitcoin's role will expand beyond just an investment or a speculative asset. It will serve as that foundation for a more decentralized, self-sovereign financial system, eliminating the reliance on traditional banks and unstable fiat currency. So that is all I'd like to touch on today. If you have enjoyed this episode, please don't forget to hit the like button and to share the video to other colleagues and friends. And if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So until next time.